Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, hope you're having a good weekend. We're going to be looking at a lot of stuff today. SPY, MJ, HMMJ, WEED, APH, ACB, and CRON. So wild action at the end of the day on Friday, and certainly only speculation as to what was happening, and even the charts are confused as to where we closed. So essentially the first thing that you need to do to educate yourself on what happened is look up quadruple witching. Get on Google and see what that is, because Friday was a quadruple witching day. And what that is when a lot of options expire, and it's longer term options, it's market index options, it's futures, it's a whole bunch of things all at the same day. And on a day like this, we see high volume and we see volatility at the end of the day. And no surprise where that's what we saw on Friday. So essentially it was a flash crash. And in my opinion, it was a whole bunch of algos and bots trading. And normally you only see this kind of action on news. This is the 1 minute chart on SPY. You will never see 2 minutes in SPY dump this significantly normally unless there is news behind it. You know, this is the kind of news reaction we would expect to see with this volume. But obviously quadruple witching is definitely an unusual event where that can happen as well. So this was a scenario where, depending on where prices of things close, whether it's individual stocks or the indexes as a whole, indices as a whole, that determines whether these options have value or they expire worthless, depending on where they close. So the close is really important, and that's why we saw all that volatility at the end of the day. Now, the pullback in the Canadian MJ market definitely started hard and fast long before the pullback in SPY. Again, this is just the last 2 minutes on SPY, and we'll look at these shorter term timeframes on these other names to show that the pullback started before that. But in my opinion, it's all tied to quadruple witching. So checking in on MJ, and I'm going to compare MJ and HMMJ because there is definitely some discrepancy over the past couple of days where, or I should say the past couple of weeks, where we're not really tracking. MJ is not tracking the market right now in terms of the major players and its biggest holdings. That being said, let's see, CRON is the biggest holding in MJ. So to that degree, we are tracking CRON pretty well, but it's overtaking the weight of CRON is overtaking MJ here in terms of what the other names are doing, which are seeing some bullish breaks before that end of the day action. So just comparing it to HMMJ, this looks a little bit more like some of the names we're watching. We're watching all these names, WEED and ACB, in tight daily ranges like this rather than that pullback. So again, in my opinion, MJ, the weighted average of CRON in this holding is skewing it to be more bearish. And just to compare to CRON real quickly on the daily time frame, that's what the daily chart looks like, pretty much the same thing as MJ, whereas we have compare HMMJ on the daily chart looks much more similar to WEED on the daily chart. So that's just a comparison of these two ETFs and something to make note of. And essentially, you got to be bullish on CRON if you want to be bullish on MJ, because the odds of MJ going up, if CRON is not going up, is not likely. So what we have here, just to go over the trends here, MJ is definitely still in an uptrend. We broke to a higher high. We still have higher lows. This is the must-hold level, and we're very likely to hold that level because we have seen 8 red days in a row, and the support level is 30.57. We're still over 3% above this support level. So I expect this level to hold at least initially. If this trend is going to change from the daily from bullish to bearish, we're going to have to see a lower high and a lower low on the daily time frame, in my opinion, because I don't think it's likely we're just going to drop right down and break that support level. Looking on the weekly time frame, this is definitely not a very strong bounce unless we see continuation, because the amount of the dump that we saw compared to the amount of the bounce, we only got back about 50% of that dump. And now we're heading back down again. So if we break this level, that is a red flag, absolutely. And comparing it to HMMJ, again, still clear higher lows and higher highs on the daily and much more contained. We're nowhere near breaking this must-hold level of 16.75. We are currently, let's see, $2.45 above that level, which is roughly over 10%. So 3% for a key break on MJ, 10% for a key break on HMMJ. And the weekly chart, again, could still not entirely strong, but as long as we can continue forming higher lows and higher highs, we will continue to recover from that dump from the top. So checking in on WEED, daily chart made a nice bull break today, and I'm going to go over a lot of things because I haven't made a video in a few days, but we were making or looking at entries yesterday, or not yesterday, on Thursday, I should say, and that's where I started my position, and I'll tell you why. But first on the daily time frame, going to be looking at, again, the higher low, nowhere near breaking. The bulls are just fine, and they even have this level, which is ideal to hold at 30.10. And previous resistance, remember $30 was a key resistance level, and when it broke, we saw a significant break, and now we're back testing and holding that support. So that is definitely a good sign for the bulls to backtest and hold that support. And we got a bull break on Friday. It just ended the day weak. Here, the close on the daily time frame, and this is where there's discrepancies. You know, Fidelity and TradingView and a lot of places have the close at 32.52. But if you look at the end of the day action on the shorter term time frames, we closed closer down to 32. So we're going to have to see where we open on Monday to get the answers. And again, there's no reason to speculate and sit there, you know, arguing or whatever, saying, where are we going to open Monday? Let's just wait till Monday morning pre-market and we'll see how it's setting up. So the key break occurred here at 32.51, and there were a few resistances, 32.49, 51, and 32.55. So all these resistances right here breaking were great for the bulls. And again, it was the pullback at the end of the day that had us reject from that resistance to a degree. But the fact that we saw some solid bull volume and a bull break is definitely notable enough for me to be looking for the bulls to continue here. And we do have a new higher low on the daily above 30.10, and that's at 30.70. So there's another support level mixed in there. So the hourly time frame is what I was using to look for. Actually, it was the 4-hour at first, because I was looking for a higher low to form. Sorry, jumping around. We're going to the hourly. So the hourly chart had this bull move, and I did not make a bullish entry. The last trade that I had made on Canadian MJ was the bull break of 30, and then I sold the gap up open. And then from there, I was very patient, no entry day after day. Even this big bull move, I did not make an entry, and that's because by the time this move was following through and the time I would have made an entry, I didn't like the risk to reward because we didn't have a higher low. Again, breaking the lower highs tells us a higher low is very likely to happen. But because we saw 5 green hours in a row with a lack of consolidation, I knew that we would need to form a higher low sooner rather than later. So I would prefer to enter on that consolidation in that higher low rather than trying to chase and get some FOMO and buy in on the way up. So we did end up pulling back. And after a couple more days of pullback, we were starting to approach this level. And I said, all right, we're pulling back at this point. We are absolutely expecting a higher low compared to 30.10, and that is because of this bull move breaking all the lower highs. So I started to scout for a bullish entry opportunity once we saw that occur. And it was a 5-minute time frame on the day where our higher low was set that was an entry point. And it was because that we saw these high of the day at the open. This is the 5-minute time frame now. High of the day at the open, we set the low of the day, and setting the new high of the day. You know, normally that's not enough to say, okay, I want a bull position, but it's all the other factors in combination with that. So the break here of this resistance was a bull signal to me of 31.31, because as soon as that happens, I know the odds shift to favor a bullish day because we have a new high of the day. And the fact that this 4-hour time frame was looking like that, or I should say, sorry, the hourly time frame, the fact that it was looking like this, again, anticipating the higher low to form, that was a point where risk to reward. So I didn't like risk to reward of an entry up here because we were going to consolidate. I liked the risk to reward entry as soon as we hit the new high of the day on the 5-minute time frame because I was anticipating the daily higher low to form, or I should say the hourly higher low to form. And we had a clear stop level. If $30 breaks, I'm out of that trade. So the bull break on the 5-minute time frame occurred at, again, that level was 31.31. And the stop level would have been 30. So that's a decent amount of risk. That's a 4% risk. So whenever I have that amount of risk before my stop loss level, I use a smaller position. If I were using a full position and risking 4%, that's way too big a loss for me if it does stop me out. So I would use maybe a half position to take half of that loss if that were the case. So initiated a position on that bull break, and we ended up getting some solid follow through. And it's been nothing but good signs for the bulls since that point happened. So again, that was the 30.70 level. I initiated a position, and then I added a couple positions on Friday. And one of those reasons for adding, again, the hourly time frame, I was watching the range of low, high. We formed our higher low on consolidation, our lower high on the same candlestick. Let's get rid of this one. This is the range I'm watching on the hourly time frame as I'm in a position and patiently waiting, and I'm taking more of a swing trade approach because of the way that the daily chart looks which is still healthy and still favoring the bulls at this point. So low, high, higher, low, lower, high, another higher low mixed in there. And then as soon as we break $32, that's another bull signal for me, because that tells us, okay, consolidation is done here from this range because we have a higher low and a higher high. So I added to my position on the break of $32, and I added some APH, which we'll go over in a little bit. But that was looking for this swing trade to follow through, because the daily time frame is still favoring the bulls. We have healthy consolidation. We established our $30 support, and we're looking for continuation. And the fact that we broke 32.51 was just some icing on the cake, because now we're looking up at 33.64 and 34.55 and trying to see that continuation, because the daily chart broke bullish over $30. So the entire setup was a factor in my decision. The daily chart having favor for the bulls due to healthy consolidation, the hourly chart anticipating that higher low to form because of the bull move that broke all those lower highs, and the 5-minute chart on the start of the day where we got that new high of the day right shortly after the open. Those were all factors that led to my entry point. So where we stand right now, again, look at the dump at the end of the day on the 5-minute time frame. Very notable. And we closed here on the 5-minute time frame. We can see it's down at 32. Now the difference, let's see, there is a possibility that some of this price action, oftentimes we see shares settle after the close of the day, and that affects the chart sometimes. Sometimes the charts will say, we dropped down to this price, when in reality, those are shares settling from earlier in the day. So it doesn't look like that's what was happening here on WEED, but that is a possibility. But bottom line is, we pulled back significantly. We did not see the strong close that the bulls were hoping for. There were some very solid gains here. I'm still in all my positions, although I did take some profit, and I'll go touch on that real quickly. So I took some profit. I took half of my position of profit in WEED. And if you want an anti-FOMO, and FOMO is, again, fear of missing out when a bull break occurs and there's a move happening and you want to rush into the trade and you want to buy, the anti-FOMO is selling partial positions, playing partial positions. Because what that does is, let's say I had my position and I was profitable. I took half of my profit here in the mid to upper $32 range. And what that does is it allows me psychologically to say, if the price keeps going, I don't have to rush to buy in because I still have a position and I'm still making profit, and that's great. And if we start to pull back from that point after I sell, I don't have to panic or anything. I locked in profit. So essentially I'm saying we're going up. That's great. I have a position to profit on. We're going down. That's great. I locked in profit when we were up near the top. So that's my anti-FOMO, playing partial positions. And I still have my partial position in WEED because I am treating it as a swing position longer term. And there's no red flags for me where we stand right now on all of these time frames. We're going to see how this reacts now early next week to see if this bearish sentiment does keep up. But we're looking for an hourly higher low to form, and anything above 30.86 is a higher low. So the bulls are fine in that regard. We are definitely going to see a higher low on the hourly. But the red flag would be if we form the higher low, then a lower high and a lower low. That would show a shift in momentum that would have me considering exiting the second half of my position. So checking in on, let's go to APH just because I made another trade there. APH has been lagging the sector now for a long time. We've been highlighting the weakness. We've been highlighting the daily clear lower highs and lower lows. I liked the fact that APH now is trying to catch up a little bit, and it broke a resistance level. So we had the low. We had the high of the bounce on the daily, which was still lower highs. We had our new higher low, another lower high, another higher low. So we got real tight here. And as soon as we broke this level of 1464, that's the bull signal on the daily time frame that we finally have a higher low and a higher high. And you can see the volume associated with the move today, and a lot of high volume on these individual names, again, because of quadruple witching, in my opinion, where a lot of individual names see a lot of high volume. So we're now looking for a clear break of 1532 and 1541 to change this daily trend where all the other individual names have already changed their trend. Definitely a laggard play on APH. But again, I like the risk to reward enough for an entry, and I'm currently sitting slightly profitable from that entry. So comfortable enough, and I will certainly exit if 1419 breaks and if we lose the hourly higher low pattern. So again, we have to see how the early next week reaction goes, and if the bulls are able to shake off that end of the day weakness with a higher open and some bullish continuation ideally. So key support on APH is 1419, key resistance is 1496, and then those other daily levels that I just highlighted. Looking at CRON. So CRON on the weekly time frame, I want to point out the huge bull volume on the way up on the NASDAQ listing and the declining bear volume on the way down. Look at the last consolidation. Bull volume indicating consolidation is done. bear volume extremely low on healthy consolidation, and then continuation. There's no red flags on this volume at this point, which is why I am looking for an entry. This daily chart has been pulling back now 3, 6, 9 red days in a row, and we're absolutely looking for a higher low here. So very similar to what I just highlighted on WEED on the hourly time frame, where we are looking for a higher low to form because the bulls broke the lower high pattern. So the bulls on CRON clearly broke the daily lower high pattern. So we are looking for a higher low. And the closer we get to the must hold level, the better the risk to reward, because we have a clear support level that we know must hold. So 860 is that support. We're still well above that level. It's not even in range right now. We're currently about 15% above that support level. But the fact that we pulled back so significantly means an opportunity is approaching. Look at the 4-hour time frame. RSI is coming close to oversold. Look at the last time we hit RSI 30 on the 4-hour time frame for CRON. That is when we had a solid bounce from $5.96, $6 to $10.50 essentially. So 50% bounce. So I am looking for an entry, but I'm being very patient because the hourly time frame is giving us very clear lower highs and lower lows. I have no interest until the hourly trend changes with a higher low and higher high. Unless we were to see a flush down, see that 4-hour RSI oversold and the hourly RSI down in the teens, that's the only time I'm going to enter unless I wait for the trend change. So I should say, unless we see those RSI kind of levels on a dump, then I'm waiting for the trend change on the hourly. I don't have to time the bottom exactly. I'm going to give up a little bit of reward to eliminate a lot of risk by waiting for the higher lows and higher highs. And then as soon as that happens, we'll have a clear stop level that'll be close by. If we form an hourly higher low and higher high, I put my stop below the low of consolidation and then look for the daily chart to see a bit of a bounce. So definitely watching CRON into this week for that potential trade opportunity. The last hourly lower high of resistance is 1041. There's a lack of support. We're looking at 10 psychological. So resistance 1041 and then 1066 are the first two levels where the bulls attempted a bounce and it just got rejected down to lower lows. So definitely keeping an eye on those two levels. And again, being patient, waiting for the trade to come to me because I don't need to rush into anything at this point. So now we're going to look at ACB. ACB was weaker than everybody else, almost taking the role of APH the last couple weeks, where ACB had a clear daily break, and it was a break for the bears. And it was almost a little red flag for me saying, okay, this increases the odds that WEED is going to break support of 3010, which was its must-hold level. In the end, it turned out that the bulls were able to hold that level, but because ACB broke 1110, key daily support, and triggered a bunch of stops, that kind of was a weight for the bulls for the rest of the day that they couldn't really overcome. So you see the close, just a clear bear day and a clear bear close, and you compare it to APH on the daily. APH had a solid close and WEED as well. And again, these daily charts are not really showing the true close in my opinion, but even if we drop down to where the shorter term time frames say we closed, it's still a green day that's not anywhere near as weak as ACB. So support on ACB right now is 1084, and then we're looking down at 1034, and it's a clear, we lost the uptrend. We had this is the must hold level, but we lost the little consolidation low. It's now a little lower high and lower low. That shifts momentum. So look at the 5-minute time frame on ACB when that support level broke earlier in the day. This is all kinds of stops triggering because traders recognize that that is a must-hold level, and then on top of it, 11 psychological breaks. So it was definitely a waterfall of shorts triggering. There was a solid oversold bounce opportunity, and I actually passed that up to look at the names that were stronger. I want to play the stronger names bullish and the weaker names bearish, but there was a nice opportunity where we did see a couple percent bounce, and they did recover. But then by the end of the day, the weakness and that dump in the sector brought us right back down towards the low of the day. So on the hourly time frame for ACB, I'm looking at resistance of 1108, a lower high in the afternoon, and then the high of the day, 1122, as two resistance levels. But you can see the hourly time frame has been nothing but lower highs and lower lows the past couple days, which again doesn't look anything like WEED's higher lows and higher highs. So some significant differences in individual names. We have correlations breaking from each other. ACB was the weakest of these big three on Friday. WEED and APH certainly saw some strength, and that's where we stand. That's all I got to say. Certainly said a mouthful, but keep an eye on HMMJ if you want more correlation to the sector as a whole. Keep an eye on MJ if you are fine with CRON heavy weighting, and keep an eye on that CRON trade that I highlighted for the shift in the hourly time frame. I have positions in APH and WEED, smaller positions because I'm treating them as swing positions and I want to give them more space before I would get stopped out. But because I locked in that profit on WEED, half of my position, that lowers my cost basis of the other half of my position I'm still holding, where I have more space now before I would go break even. So locking in profit essentially lowers the cost basis for break even on your other position. And that definitely gives me more breathing room. So I appreciate you tuning in. Feel free to ask questions in the comments here. Definitely a lot to be learning from Friday's action and really all the past week. And hopefully this was insightful, and I will see you in the near future.